Good afternoon, friends. Myself, Bharti Parave, uh, Assistant Director from Plex Council. Today, I invite Mr. Dhruv Sayaniji. He's a panel chairman of Plastic Export Promotion Council Consumer and Houseware Panel. Dhruv, it's over to you.
Yes. Firstly, very warm welcome to all of you and a very good morning. It is indeed a pleasure to have all of you with us for today's useful webinar on understanding UK's plastic packaging tax for Indian exporters being organized by Plex Council. As we come to the close of the current financial year, it is not only time to give thanks to the great strides made in exports in the past year, but also looking forward to exciting times ahead. In the most recent news, as we all know, India and UAE have finally inked the Comprehensive Economic Partnership Agreement, that is CEPA. That was actually done by Mr. Piyush Goyal and the Prime Minister in a record 88 days. So I think that from CEPA, which has been an extremely useful benefit for the Indian exporters, the Comprehensive Economic Partnership Agreement with UK is now also being closed, followed, as we are hoping that the benefits will be extended to the plastic industry as well, considering its exemplary performance over the last years and the expectations in the years ahead. From 1st April, UK will also be rolling out its plastic packaging tax policy for all those manufacturers and exporters who have been exporting to the UK. It is important to understand the impact on their businesses, as non-compliance will significantly impact their export costs. The aim of the tax is to incentivize businesses to use a greater amount of recycled material in plastic packaging to increase demand for this material, and in turn to stimulate increased levels of recycling and collection of plastic waste, diverting it away from landfills. To deliberate more on this topic, we are pleased to welcome our speaker today, Mr. Anurag Katarki. Mr. Anurag Katarki is a barrister at law and advocate practicing in Mumbai, India. He has pursued his LLB from the University of Warwick, United Kingdom, and has trained to be a barrister at City College, London. He has been called to the bar of United Kingdom by the Honourable Society of Garys Inn. In his career, Mr. Katarki has been involved in advising and representing Fortune 500 companies and startups across various judicial forums, such as the Honorable Supreme Court of India, several High Courts of India, NCLT, and domestic and international arbitrations. Before we move to our today's webinar, we wish to inform all participants that you can read entire articles on UK plastic packaging tax in the March's month edition of our popular magazine PLEXCONNECT, which is a digital magazine from Plex Council. Plex Council is also organizing a webinar on global food contact regulations for Indian plastic exporters on coming Friday, that is the 11th of March 2022. And we look forward for all of you to participate in that webinar as well. We urge all industry members to take advantage of various new initiatives of the Plex Council, such as subscription for our free monthly Plex Council Plex Connect digital magazine, and register yourself for the free PlexX pages. Join our certificate courses on international business. And of course, to know more about Plex Council activities, please log on to our website, that is www.plexcouncil.org. And Plex Council has been doing a lot of work in this regard, and I'll urge all our members to take benefits of what we have been working on, creating exciting programs and exciting engagements for all of you. Once again, we welcome all our participants to this webinar and request everyone to take maximum advantage of the expertise of our distinguished speaker today. We invite you to keep sharing your views and perspectives with us, and together let's build a greater industry for all of us. Thank you, Mr. Anurag Katarki, for his presentation. Thank you.
Hello, everyone. Thank you, Mr. Sayani, for your kind words. Now, as we begin, let's talk about the plastic packaging tax, which is one of its kind and the most newly introduced and truly one of its kind tax that is right now introduced. And we are hoping that it's going to follow the trend. Other countries are also going to follow this trend. So without wasting any time, I would like to jump straight ahead into it. Mr. Naman, if you can please upload the PowerPoint presentation for me. Thank you. Is everyone able to, am I clear? Am I audible? Am I visible? Is the PPT visible to everyone?
Yes, it is. It's perfect.
Perfect. So, next slide, please. Right. So, now, since the early 1950s, plastic packaging has cast a shadow over almost every other material in terms of production and use. Now, plastic packaging has accounted for half of the global plastic waste, and only 9% of that plastic waste has ever been produced has been recycled. Now, plastic bags, single-use food containers, and other packaging will be subject to the new tax from April 2022, as Mr. Sayani already pointed out. And as he already pointed out, that this aims to provide the incentive for businesses and manufacturers to utilize recycled plastics, creating a higher demand for recycled materials instead of new single-use plastics. As a result, we are going to see a sharp increase in the levels of recycling and collection of plastic waste, which would otherwise be sent to landfill and be incinerated. Now, how does this all come to happen? As a lawyer, it's my duty to educate you all to know how the framework does go to happen. Now, this all started from, I would say the major point was the Paris Agreement. And as of now, 195 odd countries are the signatories to the Paris Agreement. This agreement, by way of this agreement, all these signatory countries have agreed to limit their CO2 emissions. Now, however, this Paris Agreement permits countries to set their own ambitions within certain parameters. Some jurisdictions or regions have undertaken to cut carbon emissions faster than others, particularly the EU. In particular, has stated that its ambition to cut emissions by 2030 by 55%. Now, this commitment has been made as part of the larger perspective, that is the EU Green Deal, which is a comprehensive package of tax and non-tax measures. The EU's plastic tax is one of the several tax reforms that was proposed as part of the Green Deal, which aims to reduce consumption of raw materials and waste, promoting the move towards a more circular economy. So now, the most significant, as we're talking about UK, now in UK, how this came about is through the Finance Act of 2021, which sets out a more sustainable and environmentally friendly tax system by legislating to implement a plastic packaging tax. Now, the UK's plastic packaging tax is, as I said, due to take effect from 1st April 2022 and will be payable by the manufacturers who are producing in the UK and importers who are importing goods into the UK containing plastic packaging which has less than 30% recycled plastic content at a rate of 200 pounds per metric ton where certain thresholds are met. Now, according to Her Majesty's Revenue and Customs policy paper, the object of this is to provide a clear economic incentive for recycled plastic, as I already pointed out. Next slide, please. Now, the plastic packaging tax, or the tax, is chargeable for each individual finished packaging component. Now, the next question that would come to any one of your mind is that when is a packaging considered to be plastic? Now, for the purposes of the plastic packaging tax, plastic means a polymer material to which additives or substances may have been added. Now, for the purposes of the tax, plastic means a polymer. This does not include the cellulose-based polymers which has not been chemically modified. Now, additives include materials such as calcium or dyes. Now, when you assess the amount of plastic in a packaging component, the additives are classed as part of the plastics. Next slide, please. Yeah. Now, plastics include polymers which are biodegradable, compostable, and oxidogradable. So I had received a question from one of the fellow participants that whether the biodegradable or compostable polymers would be included in it. So to answer that, I would say it's in the affirmative, and yes, it would be included. Moving on. The regulations, no, sorry, actually, that's fine. Thank you. The next one. Thank you. Now, the regulations amend the meaning of packaging component as it applies to the tax to remove three categories of products. That is designed for the long-term storage of goods, that is integral part of the goods, and that is reused for the presentation of goods. Next slide, please. Next slide. Now, the plastic packaging designed to be used for the long-term storage of goods is subject to certain limitations and the plastic packaging that you need to account for. Now, I've provided a non-exhaustive list of it, so it could include things like toolbox kits or first aid kits or like your earphone cases, because these are something which are used in the long term, so it doesn't cause as much waste. It does not form a major part of the plastic waste that has been collected till now. That's why these things have been excluded. Next slide, please. Now, goods in which to be an integral part of the goods sold. Now, this is because without this, the goods cannot be reasonably used or consumed. Now, examples of this can be like a lighter, or like you can't just carry a lighter without the plastic container of it, because it's just simply impossible. And so too as printer cartridges, or like even like tea bags or inhalers. These are like some of the non-exhaustive examples that I've come up with after reading the legislation. So this might something that you all should take note of. But it does not include products such as yogurt pots, and I would say liquid soap pumps, as they only act as packaging or storage for the goods that they contain it. They do not form an integral part of what the product is. Next slide, please. Now, plastic packaging, which is primarily designed to be reused for the presentation of goods. Now, this is usually done because, again, like I said, the same example is here, the same reasoning for long-term storage of goods, because they don't form part of the major plastic waste. That's why they have been excluded from this. Certain examples that I could think of were like reusable sales display shelves, shop fillings, and sales presentations. Next slide, please. Now, single-use products which only provide a packaging function only when used by the end users. Now, these have been added for meaning to for the meaning of packaging component for the purposes of tax. Now, in these things, things such as daily use waste, which form a really large part of our plastic waste, like bin liners, your party cups, toothpicks, of course, the plastic ones. The plastic cutlery is a dicey point, so I wouldn't like to get into it. But yeah, these are some of the examples that I could think of from the legislation. Next slide, please. Sorry, my connectivity. Yeah, like I said, now packaging design to be suitable for use in the supply chain. Like I've tried to provide some examples which can help you all to get to know whether your type of exporting product comes within the range and all. So these are the type of examples that I could think which are subject to the tax. That is like the bottles designed for single use, like all this normal, I'm not going to name a brand, but any plastic bottles that you buy off any vendor out here. Even the tops, the caps, the labels, the plastic trays which we get in our ready-to-eat food containers, and like I said, the film designed to produce such a film around raw meat, the plastic filming which you do around food packaging is going to be included in the tax. And the things which I don't think meet the definition are not subject to the tax, and these would be like the food storage boxes and containers designed to be reused, such as lunch boxes. Now, these are like, this again connects to the same point what I was saying, that long-term storage. And like drinking bottles, the good plastic bottles which we use in our house for over and over and which are not to be crushed and thrown. I'm talking about those bottles out here. Plastic cutlery, like this is something which I said, prima facie view is that it's not going to be included, but as like I told you, it's one of its kind tax, and yet issues are going to arise. So slowly things are going to be clarified as and when we go through it. So we're still waiting on clarification regarding these things. And one more example which I could think of are reusable coffee cups. Next slide, please. I think I already covered this. Next slide, please. This was covered. Next slide, please. So now, as you all would be thinking, how does this tax function? Now, the recycled content of a component will be based on the weight of the plastic material within a component. Within a component compared to the amount of recycled content. For these purposes, the recycled plastic is plastic that has been reprocessed from recovered material by means of a chemical or manufacturing process other than organic recycling in order to be used for its original purpose or for other purposes. The tax will not be chargeable on plastic packaging where it has 30% or more of the recycled content, like I mentioned earlier, or it is less than 10 grams of plastic packaging is manufactured and or imported by a business annually. Now, when I say that regarding 30% or more recycled plastic content, I mean that it is, when I say that, I mean that as we all know, a packaging is made up of multiple materials of which plastic is not proportionately the heaviest when measured by weight. So with this, I'll give an example. Now, if a plastic pack component is made up of multiple materials but contains more plastic by weight, including additives which form part of the plastic, as I mentioned earlier, than any other substance, it will be classed as a plastic packaging component for the purposes of the tax. Now, you all would be wondering, what are these other substances that he's mentioning of? Like, it could be anything. So the Her Majesty, like I said, has taken the pleasure, has taken it on board to define this, thankfully. And this is how they've defined it. Now, the other substances that would be considered are things like glass, aluminium, steel, other metals, paper and board, wood, and any other metal. Next slide, please. So to give you all an example of an understanding of this, I've just created a simple example. Now imagine like you have a carton which weighs like 10 grams, out of which 4 grams is plastic, 3 grams is like aluminium, and 3 grams is covered. The heaviest component in this packaging is plastic. So all 10 grams will be considered a plastic packaging component, as plastic is the heaviest material out here. Next slide, please. Now, you're wondering how to calculate the recycled plastic content of plastic packaging components. I have again taken the liberty of giving a small example. So now, like a plastic component, imagine now here, it is made up of like 2 grams of recycled plastic, 2 grams of virgin plastic, or like the first cut plastic, 3 grams of aluminium, and 3 grams of cardboard. Now, to calculate the proportion of the recycled plastic, divide the recycled plastic weight by the total weight of all the plastic elements. So like a small thing like a game. So in this thing, 2 grams were virgin plastic and 2 grams were recycled plastic. So out of 4, 2, so only 50% is the recycled content. Now the packaging, our next topic, packaging that is exempt from the tax. Next slide, please. Now the HMRC has listed 4 things that come, the 4 categories of packaging that is exempt from the tax. They are products used, these are products used for the immediate packaging of licensed human medicine, permanently recorded as set aside for non-packaging use. Third one is the used as transport packaging to include multiple goods to import multiple goods safely into the UK. And the fourth one is which are used in aircraft, ship, and rail goods stores. Now, the first one, as I said, used in immediate packaging of licensed human products. So now plastic packaging manufactured or imported for the immediate packaging. And when I stress on the word immediate, I'll let you know why. Only for the ones which are immediate packaging of licensed human medicinal products is not subject to the plastic packaging tax. Now, when I say immediate packaging, I mean it is a container or other form of packaging that is immediately in contact with the product when it is produced. Now, medicinal product is also defined by them. A medicinal product is for use by people to A, prevent or treat diseases, B, restore, correct, or modify a psychological function by exerting a pharmacological, immunological, and metabolic action. And number three, the C part, is make a medical diagnosis. Make sure that not only the immediate packaging is something to stress for, but also the medicinal product has to be registered. Moving on, the second point is that plastic packaging components permanently recorded as set aside for non-packaging use. Now, these components are to be used for something other than packaging, which are not subject to the tax. For example, plastic film that will be used to coat whiteboards. Now, this exemption includes products that are primarily used for something other than packaging, such as film to enable the fragmentation process to take place to make silage. A small example. Now, Her Majesty expects this exemption to apply to a very small number of highly specialized products. So, in order to get this exemption, you must provide a clear evidence to verify any claim for this exemption. And you must record, it is very important for record keeping purposes, that you must record them as set aside before or as soon as they have been manufactured or imported. And the records must show this. Next slide, please. Now, exempt packaging, which does not count, now the next one is the transport packaging or imported goods. In which case, which I would say is tertiary packaging. Now, so plastic packaging tax, this tax is not charged on transport packaging, like I said, tertiary packaging, using the delivery of goods into the UK. You do not need to account for it in your tax return as long as it is either a rolled, rate, ship, or air container packaging component that is used to both transport multiple sale units or group packaging. And number three is to prevent damage during transportation. This exemption, however, does not apply to normal packaging around a sales unit, normal packaging around a number of sales units, unfilled transport plastic packaging imported as an item of its own right, and packaging used to prevent damage to a single good on import, transport goods within UK, and transport goods out of UK. So just to simplify this, I would like to give a simple example. So you're exporting glass. So now naturally glasses, if they're not protected properly, they are bound to break. So now in this, you would bubble wrap it to protect it. So that bubble wrap is not likely to be taxed. But if you send the bubble wrap as it is, like you just dump 10 tons of bubble wrap in a carton and you just send it, that is going to be taxed. So it's very important what that plastic packaging component is being used for to get this exemption. Next slide, please. Now, who pays the tax? It's only the plastic packaging that's manufactured or imported on or after the date that should be included in any de minimis or subsequent tax calculations. Now, the PPT is payable, as I mentioned earlier, by the manufacturer in the UK or the importer in the UK, who are doing less than 30% of the recycled content, the thing, and they'll have to pay this tax. The liability for this tax can be deferred where chargeable plastic packaging is intended to be a direct export. So now I'll give you an example. Now, like I got some messages where like some businesses here also have an import unit in UK, and then from there they export it to other countries. Now, if you're doing that within a period of 12 months where you're importing the good and exporting it, or you're manufacturing in the UK and exporting it within the period of 12 months, you don't have to pay this tax. Next slide, please. Now, registration. Now, the tax will be administered, collected as usual, and managed by Her Majesty's Revenue and Customs Department, who are going to establish and maintain a register for the purposes of collecting and managing the tax. The manufacturers and importers of plastic packaging components will be liable to be registered for the tax if there are reasonable grounds to believe that they will manufacture and or import at least 10 tons of finished plastic packaging components in the next 30 days, or they are manufactured and or imported at least 10 tons of plastic packaging components in the last 12 months. Now, the businesses will need to keep a record and in most cases register for the tax, even if all the packaging that they manufacture or import contains more than 30%, contains more or less than 30% recycled plastic. Next slide, please. Now, the next question you can, before I make it boring for other people, you would be wondering why is this person telling us what UK people should do? But trust me, if you just hang on to it, it will all connect towards the end, because what those people in the UK are supposed to do is indirectly going to affect you. So it's better off to know the periods and how the functioning is going on there so that you can plan your business strategy accordingly. So now, the next question that comes is when to pay the tax. Now, the tax returns are quarterly, which is that they cover 4 accounting periods each year. These are the 1st of April to 30th of June, 1st July to 30th of September, 1st October to 31st of December, and 1st January to 31st of March. Next slide, please. Now, there are different types of tests that have been applied in order to know whether, in order to calculate the tax. So the first one is a forward look test. Now, business normally, imagine, like this is an example I've given. A business normally manufacturing around 0.25 tons of plastic packaging every month. On 16 June 2022, they received an order for 20 tons of plastic packaging to be delivered by the end of June. The business will need to register for the plastic packaging tax by the 15th of July 2022. That is commensurate with the 30-day limit which I earlier mentioned. Now, they will account for and pay any tax due on all the plastic packaging that they manufacture from 16 June onwards, including the normal production as well as the new order. So the business liability date in this case will be 16 June 2022. That is the liability to register. The next slide, please. Now, this is a backward test. This is I got a question from one of the person. That's why I had to include this. So this is a very tricky one. So I would like you all to pay attention on this. Now, imagine like a business normally manufactures 4 tons of plastic packaging every month. Now, on 1 May 2022, they have only manufactured 4 tons of plastic packaging between 1 April to 30th April. So they do not need to register. On 1st of June, they have manufactured 8 tons between 1st April and 31 May. So they still do not need to. And on 1st July, they manufactured 12. So between 1st April and 30th June, they must now register for the plastic packaging by 30th July. Next slide, please. Naman, can you hear me? Thank you. Now, the government plans to tax imported plastic packaging at the first point it is commercially exploited in the UK. This means the first time that plastic packaging is made available through sale or supply. The entity that either imports those goods into the UK and or is the first to commercially exploit them in the UK will be liable to register for it. Next slide, please. Now, in most cases, where there's only one manufacturing process, the tax will be applied at the point where a UK manufacturer commercially exploits charging plastic through sale or supply, including free of charge to be packed or filled. Plastic packaging involves multiple processes, often carried out by different manufacturers before it is made available for packing or filling. In these circumstances, we believe that there are different approaches that could be taken. Next slide, please. That is, now, the HMRC, like I said, are very smart and a few steps always ahead of us. So they have come with something called a joint and several liability for the tax. Now, to minimize the opportunity for tax avoidance and non-compliance, the government will consider extending the tax liability on a joint and several basis to other businesses in the supply chain if it is not accounted for at the appropriate time by the main person. Now, this could include manufacturers, pack fillers, brands, and retailers. The tax would be charged on businesses that knew or had reasonable grounds to suspect the tax had not been accounted for. So even if you have a reasonable suspect, someone in the UK, they have to notify the HMRC. Otherwise, there is a liability that may ponder upon you. The government is welcoming more views upon it because this is something which is very difficult to administer and also convict. So, but this is something which they have done to act as a deterrent. Next slide, please. Now, the records that an importer or a manufacturer will need to keep. And participants, this is very important because whatever they need to keep, they will make you keep. So just please be careful in these things. So once registered for the tax, you're required to keep the products, the records for at least 6 years following the end of each accounting period. So the importer and the manufacturer have to keep the records for the full 6 years. Now, in summary, like I just could summarize it, the records that they need to keep are like the weight details of each plastic packaging component, details of the weight of plastic packaging exported, if applicable, evidence of the recycled content, including how you have worked out the percentage of the recycled plastic is sourced and what product lines the content is used with, and evidence of why an exemption should be applied, like I said earlier, in the case of packaging for medicines, for human medicinal products. Next slide, please. You should keep the records even if you're below the threshold. This is a recommendation. It's not mandatory, but it's always better to have your back guarded. That's why they have recommended that even businesses who are importing or manufacturing less than 10 tons of plastic, whether it has 30% recycled content or not, should register just as a precaution because safety is better than cure. Now, this is because the threshold is off. And also one of the main reasons is, as I mentioned earlier, this is because the threshold is on a rolling 12-month time period basis. So you could hit the limit and be liable for the records and pay tax. All measurements for the tax should be in kilograms. Next slide, please. Hope you are right. Now, like I said, this is a tax which is very important. And the HMRC has imposed both civil and criminal penalties for the failure to comply with the tax, including penalties for failure to register, file returns, and or pay the tax. Now, penalties, like I said, are applied to encourage taxpayers to comply with their obligations, to act as a sanction for those who do not, and to reassure the compliant majority that they will not be disadvantaged by those who do not pay play by the rules or do not pay the tax. The government does not use penalty as a primary way of raising revenue or to offset running of costs, but also to improve compliance. Next slide, please. Now, there are due diligence checks which your importers whom you're supplying to are going to carry out because it is made because since the regulations are very cumbersome and the penalties the penalties are civil and criminal. So what the reports are saying is that all the importers and the manufacturers are going to hold a due diligence check, which is a very comprehensive one. Now, if you manufacture the plastic packaging components, a check could be, but as I said, it is not. It is a non-exhaustive list. Is getting the written confirmation from the customer to prove that any claim that you are not liable. For example, your customer performed the last substantial modification. Next slide, please. Now, this is the most important, which is mostly related for all the exporters out here. Now, if you import or purchase plastic components containing less than 30% recycled plastic, the importer is going to do most of these checks. That is requesting confirmation of the tax status of the plastic packaging component from you, that is, i.e. the supplier, getting signed documents from you all, confirming that plastic packaging tax has been properly accounted for, getting product specifications for the packaging components, including the weight and compositions of the products, physically checking the weight of packaging components to your purchase order and any of the product specifications. Next slide, please. Now, checking that the price you pay for packaging components reflects the current market value. So if components are offered at a lower market value, they are going to find out the reason for the low cost. Also, they're going to obtain copies of any certification or audits that have been conducted on you all, that is the suppliers or the reprocessors of the recycled plastic. And they would conduct physical inspections or audits on the packaging supply chain to improve information given by the suppliers or the customers, and checking the details provided against other sources, which as supplier and customer websites, product specification, sales and marketing information. Next slide, please. So you're already wondering, why is all the due diligence, why is all this so relevant to me as an exporter? I just want to sell my goods out there, whatever's little costs up and down will happen. Why am I here? And why have we invited this guy to talk so much about something about UK when we are in India? Well, it is because the evidence, it's the problem with this tax is there is a reverse burden of proof. So you're taken by the HMRC, your importer or the manufacturer, in your case, the relevant person is the importer, is taken to be liable for the tax unless he proves that he is not liable. So there's a reverse burden of proof. And how is he going to prove that he's not liable? By providing sufficient evidence. Now, what is a sufficient evidence is a very subjective thing, which goes on a case-to-case basis. So the more the merrier is basically the thing. So few things that can account for as sufficient evidence I have listed below. So things like product specification. Now, when I say product specification, I mean the proportion of the recycled plastic, the weight of the plastic packaging, if the packaging is plastic, and if the packaging is exempt from the tax. Now, what are they going to ask for you all from this? They're going to ask maybe for the quality assurance audits, sales and purchase invoices specifying all these, production certificates, certificates of conformity, business accounting systems, accreditation and international standards. And next slide, please. Now, when I say business accreditation and international standards, I mean accredited bodies such as the International Organization for Standardization or the British Retail Consortium use a number of standards. Now, the HMRC recognizes some international standards require businesses to be able to trace the level of recycled plastic in their plastic packaging. So depends on which agency you go to, it depends. So your compliance slowly starts increasing if you're understanding as a supplier. Now, the HMRC has taken the liberty, I got a question the other day saying that what are the agencies in India? So I don't know if there are any agencies which are recognized by the HMRC as of now. I'm sure there are businesses which are doing this, but I'm not sure if they're recognized by the HMRC. So I've taken the liberty of list out a few environment accreditation agencies or the environmental regulators, which have been approved by the HMRC, which you can discuss with your fellow importer and probably work something out. That is the Environment Agency, the Natural Resources Wales, the Northern Ireland Environment Agency, and the Scottish Environment Protection Agency. Now, this is sufficient evidence. Now, the most interesting part comes. Next slide, please. Now, the most interesting part comes as to how you, as a supplier or an exporter, are going to be impacted in this. Now, when I say that all these things people in the UK have to comply with, the only way they are going to comply with it is if you give them that helping hand. And they're going to make sure that you give it by hook or by crook. And how is that? That is by way of their contract. You can expect, and I'm pretty sure you all would have received the first draft from them already, considering it is just 1st of April is around the corner. So you can expect things like they would want you to make it a condition or a part of your reps and warranties that the contract will contain things like the quantity of the plastic packaging, the proportion of the recycled plastic, the weight of the plastic packaging, and if, like I said, if the packaging is plastic and if the packaging is exempt from the tax. Now, in this, the Indian exporters can expect considerable amount of resources to be used in this aspect. Naturally, an importer in the UK who's bound by such rigorous checks and due diligence is, and who is also maybe liable for heavy penalties and even criminal sanctions, will seek to protect its interest. Next slide, please. Now, it is axiomatic that the importer will require the Indian exporter to provide the required specification. And when I say that they'll make this an essential term, I mean that the breach of which would likely entitle them to repudiate the contract at the time of inspection and refuse the delivery of the goods, which would be a huge blow on any exporter. And not only that, moreover, the importer is also likely to impose and incorporate clauses which protect its interests in the event it is later found out that the required specifications are not met. So the indemnity clause is going to be revamped, and the amount of the indemnity and the liquidated damages clause is going to be significantly revamped. Now, this can give, and it's what I've understood from the industry is that most of the contracts do have an arbitration clause. So this is going to give rise to a huge amount of international arbitrations between the parties, which in turn have a heavy impact on the costs of the Indian exporters. Now, this is one side of the story. Moreover, the thing is that if you are on unequal footing, if you're on equal footing, you can still have the terms negotiated. And when I say international arbitration, you can choose a neutral jurisdiction. So if you're dealing with UK, you can choose a neutral jurisdiction, something like Singapore or Hong Kong. But if you don't have, it's highly likely that the importer would choose the jurisdiction of the arbitration to be UK instead of a neutral jurisdiction. So it will be you who will be flying out your lawyers, engaging lawyers in the UK, where it is highly expensive. And the most problematic part for us is that UK also provides for litigation costs, the costs for the event. So whosoever wins the arbitration will also have to pay the litigation costs, which can also run into millions of pounds. Now, there can be extra liability for the exporters who are not involved in the manufacturing process of the goods that is being exported by them. Naturally, there are many businesses out here which don't manufacture themselves and export it. You might be buying goods from 10 different manufacturers, loading it up and exporting it to the importer out there. Now, in such situation, your liability is even more. When I say extra, it's because the moment the exporters would then in this need to incorporate the relevant clauses to protect your interests. Like, I'll give you a simple example. You won't have much of a bargaining power on such clauses regarding compliance imposed by the UK importer to do it. But if you don't incorporate the similar clauses to protect your interests against everyone in the supply chain, be it the middleman, be it the direct manufacturer, the factory from whom you're getting, you might be found in a very precarious position where you're being sued by a UK entity for millions of pounds and you have no recourse for yourself. and that would something which would hinder your business operation to a very large extent. So all the contracts in the supply chain have to be modified accordingly. Next slide, please. Now, like I said, the HMRC has thought ahead this time, unlikely, but Her Majesty, with her utmost wisdom, has actually thought this legislation through. Now, the risk of abuse they have accounted for. The government has outlined the risk posed by business fragmentation in order to benefit from the de minimis rule. Now, when I say the de minimis rule, like I said earlier, it's all going to connect. So the de minimis rule is when they say that, okay, if a business is importing or manufacturing more than 10 tons of plastic which contains less than 30% of recycled content, they need to account for the tax. Now you might think, oh, okay, I may split the thing, and instead of calling for the order of 30 tons from one business, I'll make it 4 companies. I'll call it from 4 entities and split it into 999 each or 888 each, whatever. But they have accounted for it because in this thing, what the group of company doctrine kicks in. So I've given the example. The group of company doctrine kicks in, and for the group, and this purpose is the tax. You all be jointly liable to pay the tax. You can't say that this company is doing this much and we all are doing 10 tons below. They're going to account to you as a whole. And as a whole, if you're doing 99 tons each, they're going to account it in totality and tax you. And if you don't, and if you try to evade this, like I said, heavy civil actions and criminal sanctions. Now, these provisions would ensure that all connected companies, using the connected persons definition set out in 1122 of the Corporation Tax Act, are treated as a single entity when determining whether they are able to benefit from the small producers exemption limits. Next slide, please. Now, plastic packaging is used in a variety of sectors. So the PPT will have a broad impact on many businesses. The businesses that are likely to be affected are the retailers who are importing the products, such as the bin liners, sandwich bags, water fizzy drinks, bottles, the manufacturers, the publishers importing plastic use for laminating books or like applying plastic sleeves or to magazines, the transport providers importing plastic for transport, like bubble wrap example I gave, and the fresh food processors, like I said, the plastic filming around the meat and the food and the fruits and all. Next slide, please. Next slide. Now, like I say, this thing, the extraterritorial effect, can be in many ways. Like I've told you the legal aspect of what you can expect. The other business aspect also I've tried to incorporate. Now, it can affect the Indian exporters in many ways in terms of the production of plastic packaging. You all will now have to adhere to the new rules to escape the tax duty or to make the packaging import worthy. Issues also might arise as importers stop buying from the Indian market if you don't comply with these things. You need to spend considerable amount of money in procuring the data, because like I said, that they need to maintain 6 years of record. So it's highly likely that they'll make you also maintain just to keep their bags safe, because by chance, if anything, they are hacked, they would want to give to you. And this is going to be a term of the contract for sure. If I was the lawyer, I would put it 100%. Things like, I know like how the small businesses will benefit, but like on the large, the Indian exporters, I would say less demand of from the Indian market, comparatively low profit margins. Maybe with how the prices are going up, you might also have higher import duty that might be levied on the UK importers, which would impact and decrease the export business in India. Next slide, please. So, but one thing is that even though the businesses like you all may feel that there is no positive effect of this move and ultimately all your costs and compliance costs are going to increase, I'm of the view that this industry is actually right now being given a huge opportunity. And when I say a huge opportunity, I mean a huge opportunity to make a huge impact in making the world a more habitable place. A few costs here and there, your industry is actually worthy of making this impact. So you all should be proud for the sacrifice, whatever little sacrifice that you all are doing. Now, and also, if the Indian importers imbibe the practice in accordance with the UK rules for plastic packaging, it would benefit them in cutting competition from other exporters exporting into the UK. This would also help the Indian plastic packaging marketplace to achieve the sustainable development goals, and also would benefit in upscaling the export to other EU countries. And when I say, why I say other EU countries is because, like I said, next slide please. Like I said, the EU Green Deal. Right now you would be thinking, okay, the tax is in UK, but it is part of a bigger perspective and a bigger aim, that is to protect the world, to protect us from the global warming and the climate change, and to cut the carbon emissions. So now, next slide please. So now in this, you can slowly expect other EU member states to also follow this. And when I say follow this, why they will follow this is because as of 1st January 2021, a contribution based on the non-recycled plastic packaging waste was introduced as a new revenue source. A uniform call rate of 80 pence per kilogram will be applied to the waste of plastic packaging waste that is not recycled, with a mechanism to avoid excessive contribution from less wealthy member states. So basically, in crafts, all these member states are going to be penalized. They are penalized in the sense they have to pay a uniform call rate of 80 pence per kilogram for all the plastic waste. So now, to in turn to be able to pay that, they will need to recover it. And how they're going to recover it is from you. I mean, as in the importers and the manufacturers. Next slide, please. So in this thing, what I have been told is that other countries are already into it. Now countries such as Spain, Italy have deferred the plastic packaging tax to a certain extent, but it is very likely that all member states are going to imbibe this. Italy and Spain, that I'm told, is highly likely to impose this by January 2023, and other countries such as Poland, Germany, and I think even France are highly likely to impose this, along with other tax sanctions also and non-tax measures into this. So when I say that if Indian importers imbibe this practice, the market is huge. You will have the movers advantage, and you can export throughout the Europe, because the biggest advantage which we Indian exporters would be having is cheap labor, which we can make use, and we can actually make India a hub for exporters and a hub for recycled plastic exporting. So by this, I have tried to summarize the plastic packaging tax to the best of my capabilities with a very limited time slot that I was granted. And I've been told I have to answer all your questions, which I'm very happy to do. So without any further ado, I would like to do that.